Hello traders, welcome to our edition of Tactics and Analysis for the week of October the 10th. Crude oil has begun to show signs of selling pressure after having made solid gains the past couple of weeks and will be an interesting trade these next few days. A look at West Texas Intermediate, the US crude oil, on a short-term chart shows that the value of the commodity has done well since the end of September. However, after hitting crucial resistance late last week, WTI was not able to punch through these important price levels. The value of crude oil strengthened late in September because of a stated agreement from an OPEC oil summit that was held in Algeria. Saudi Arabia announced at the end of those meetings they and other cartel members would cut back on the commodity's production. Crude oil has traded in a rather tight range when looking at a mid-term chart. The price of the commodity has been under pressure for a substantial amount of time because the global economy continues to be lackluster, and it's likely the weak economic fundamentals are not going to change anytime soon. Compelling evidence which suggests crude oil could see more selling pressure this week is the fact the commodity was not able to muster gains as Hurricane Matthew came ashore in the US last Friday. Speculators showed they were unwilling to be big buyers and trading for crude oil remained tranquil. Crude oil is an interesting trading opportunity. Technically and fundamentally, there are reasons to consider short-term selling positions on the commodity in the coming days. The inability of crude oil to power past key resistance levels is important. Also, news is beginning to circulate that the proposed agreements on production cutbacks from the recent OPEC summit have not succeeded. It's being reported that many of the major producers inside and outside of the oil cartel are planning no major reductions. Both WTI and Brent could see speculative selling and should be watched carefully for continued downside pressure this week. Traders should note risk management is always important when trading crude oil because of its potential for reversals and volatility. Short term, the crude oil may be negative. Mid-term and long-term, we are unbiased at this time. Thanks for watching the Tactics and Analysis. We wish you profitable trading.